Awesome. Are we all set to start, or should we give folks a minute to trickle in?
Yeah, we've got people joining, about 28 people in.
Some.
Give it a little more time. Welcome, everybody. Paula and I are in Northern California. I'd love to know where everybody is joining from. Feel free to use the chat. Miami, Jacksonville, beautiful.
Lots of places represented. Cool.
Jane from the Bay, welcome.
Sunny Seattle.
I just came from Leavenworth, Cheris. Flew into Seattle and took a long drive to Leavenworth for Oktoberfest. It was not sunny when we were there. Washington, D.C. All right, we've got 43 folks here. I like to see that we're representing the whole country. Love it. Catherine from sunny San Diego. I'm betting it's sunny there today, maybe. Kim, there will be a recording of this session that will show the slides, and it will be emailed to you after the session. Indiana, North Carolina. Welcome, everybody. All right. How are you feeling, Paula? You want to dive in?
Yeah, let's do it. Okay, well, thanks everyone for joining. Really glad you're here. For those of you who don't know my talking head from TikTok and other areas of the internet, my name is Paula Gorman. I am an operations consultant. I left corporate about 3 years ago to build my consulting business, which I'm happy to report is doing well and has been a fun journey. And now I am taking everything that I've learned and creating educational content and resources for other folks who are starting and scaling their consulting businesses. I think that this financial aspect, sort of the back office of our businesses, is one that can feel overwhelming and stressful. But it's very important. So I reached out to my friends at Collective, which is an all-in-one financial platform for self-employed solopreneurs like us that I use and love, to help provide some more details for all of us that have questions about taxes, finances, payroll, and the like. So again, thank you for joining. Thank you, Marissa, for being here and sharing all of this great information.
Absolutely, Paula. We're so glad to participate with the Lyft group and share some educational content. This session is going to be formatted in 2 parts. The first, we're going to go through some slides, answer some of the high-level questions, common business deductions, difference between LLC and S Corp, and then we're going to turn it over for a live Q&A. So in the Zoom, there's a Q&A feature. It's separate from the chat. Any questions you have, related to the slides or not, please brain dump them and put them in the Q&A. There are no bad questions here. So highly encourage you to take this time to ask any questions you've been dying to ask, and we'll do our best to get through all of them. Real quick about me, I've been with Collective for almost 4 years, which is an eternity in startup worlds. And prior to that, I was 10 years in public accounting, literally sitting in a cubicle doing tax returns and, tick marks on paper documents. So a lot of experience on the tax and financial side, and supported businesses of all sizes, from solopreneur to, trucking companies. So I've seen a little bit of PTSD, which lends itself to this presentation, hopefully. So we're going to dive in, simplifying your self-employed finances, what every solopreneur should know. And I highly encourage chatter in the chat Q&A. Again, no bad questions. So we're going to start with LLC versus S Corp. What are the basics? When would it make sense to switch between either? It may not be the right solution for you to opt into S Corp, so we can talk about those instances. What is it like to pay taxes when you're self-employed? So if you've seen that tax bill and you're not sure what it means or why it's so big, we can talk about what contributes to that. We're going to go over high-level deductions for freelancers, and then we'll turn it over to Q&A. This webinar is for educational purposes only. Nothing contained in this or any related webinar should be viewed as legal or tax advice. Please always consider consulting a professional if you need legal or tax advice in operating your freelance business. And we're going to dive in. So LLC versus S Corp. I first want to talk about LLCs. And particularly when we're freelance or self-employed or businesses of one, it's going to more often than not be a single member LLC where you are the only owner of this legal structure. And so what are the pros? The first one is that a single member LLC is relatively easy to set up and it's inexpensive for the most part. You would go to your resident state with the Secretary of State, pay, a formation fee, and then you apply for a tax ID and exist as a business. The single member LLC existing gives you a tax ID, a legal business name. It creates a layer of separation. It separates your business debt from your personal debt. So there's some liability protection there. And a pro, which could end up being a con, is that the tax filing for single member LLCs is very simple. If you're set up as a single member LLC, you may be familiar with Schedule C on your personal tax return. It's a summary of essentially your profit and loss. And then for tax reporting, that's it. No separate business tax return, no formal requirement for payroll. So the compliance and the administrative burden is relatively low. The cons, when you're set up this way, single member LLC, reporting on your personal return, you pay a couple layers of tax. And we're going to dive into what this looks like a little bit further on another slide. But your profits are subject to both self-employment and income tax. So that burden can feel pretty heavy. Oftentimes we see when people are set up this way, since it's a little bit less formal on paper, there could be some commingling of business and personal funds. So it may be a little bit more challenging to untangle at year end. Maybe you've experienced this. In some instances, maybe you don't look as formal on paper. Maybe you want to apply for a small business loan or a grant. And because you're reporting on your personal tax return, you're handing over, your personal tax profile instead of a standalone business tax profile. And then under the structure, you don't pay yourself a formal W-2 salary. The way you pay yourself is via distributions, where you just take money out of that business bank account and spend it for personal expenses. So pros and cons, high level pro, it's simple for tax reporting, relatively inexpensive to manage. Cons are the self-employment tax burden, and then maybe the visibility. Maybe it doesn't look as formal or established on paper. An S Corp election. So an S Corp election is a tax status that's actually added onto a legal structure like a single member LLC. So if you have elected S Corp or you're going to exist as a legal structure underneath first, and that may be your single member LLC. So when you add this S Corp election, the obvious pro is that you may get an opportunity to reduce the self-employment tax burden. And so that's often when people start to explore this tax status. Part of this, and we're going to cover this in more detail, is paying yourself what's called a reasonable salary. You'll pay payroll tax on that, but that becomes a business deduction. So anytime there's a deduction, that lowers your taxable profit. That's an advantage when you're under the S Corp because you do pay yourself on a wage. An S Corp still retains pass-through taxation. So you might have heard of C Corps and the concept of double taxation. A C Corp is an alternate legal and tax structure where it pays a corporate level tax. It's 21% at the federal level. And then you pay tax again when the owner takes a dividend. So that's the true double taxation structure, where an S Corp is passed through. The business itself doesn't pay corporate tax, but rather the owners pay the tax at the individual level. So that's an advantage of making the S Corp election. And then this structure requires more formal financial statements. A formal tax return needs to be submitted every year. So now you're creating this more robust formal structure in your tax profile that's isolated to your business, which can lend to growth, SBA loans, grants in the future. The cons are that it's more costly to operate. So oftentimes, if you're kind of in this limbo trying to decide which is right for you, people will look to the costs being more than, I'm sorry, we want to see that your savings potential is more than the cost to do the extra administrative work, because the S Corp does trigger more comprehensive financial statements, a need for payroll, and filing a separate business tax return. Another con, this reasonable salary is required. A lot of these are pros and cons. There are payroll costs associated with running a formal payroll, so that's a cost you want to consider. An S Corp does limit how you can grow. So if your business structure is something where you want to IPO in the future or have international investors or various classes of stock, the C corporation is probably the right structure for you. Versus an S Corp, they're usually built for closely held, single owned up to 100 shareholders. And then because it does have its own business tax return, there's a lot more scrutiny on this additional filing. So when does it make sense to switch or choose either? Single member LLC, simpler tax structure, less administrative work. We want to make sure that the savings potential is more than the cost to do the work. And so usually this exists when your business profit after your deductions is more than 60,000. So if it's less, staying a single member LLC may be more advantageous for your situation. Alternatively, maybe you have a side hustle that's earning any amount, but you also have a full-time salaried role. The way that the savings work with an S Corp, and we're going to get to this slide, has to do with the way the IRS assesses Social Security and Medicare tax. And when you're paid via salary through another company, that kind of gets worked into the mix. So if you have a high earning salary, that can limit the savings potential if you were to elect S Corp status, in which case staying a single member LLC might be the right fit for you. Maybe you just don't want to deal with the extra administrative work, so there's no harm, no foul in staying a single member LLC. Or maybe your side hustle or the self-employed side is new. Maybe you're testing the theory, maybe you're still shopping around for a full-time role. And if you're not fully committed to self-employment, it may not make sense to go the full steps to become an S Corp. Alternatively, the S Corp may be a good idea if you're looking for a savings potential and your profit is more than 60,000 and you don't or have less than 100,000 of W-2 income. So that's where, the Social Security tax impact comes into play. You are committed to growing your business. So we typically ask, are you going to be self-employed for more than a year? Because this S Corp triggers some annual filing requirements, we don't want to start and then stop if we're testing a theory. Maybe you're looking for those grants or future loans and you want to formalize your financial statement. So when you operate as an S Corp, you not only have the profit and loss that you're used to for your Schedule C, you also now generate a balance sheet. And so now you've got this comprehensive book of financial statements that you can hand off along with a separate business tax return to lenders or, a grant that you want to apply for. And then if you're just ready to level up your business, you want to put yourself on payroll, a non-savings advantage of being on S Corp is you start to get W-2 income for yourself. And so if you found yourself needing to show proof of income for buying a house or an investment property and proof of income has been difficult, having an S Corp with a salary and a W-2 and a pay stub can support that. And so what does the tax actually look like when you're self-employed in either instance? So we're going to walk through the type of taxes you actually pay when you're self-employed. The first one is income tax. This is the unavoidable truth for all of us. If we're earning income in the United States, we're all going to pay income tax. Income tax is determined by, one, your filing status. So married, single, head of household. And then within each of those, there's tax brackets determined by your total household taxable income. So that could include your self-employed business, your partner's W-2, maybe you've got a rental property and some stocks in Robinhood. So we're gathering all of the household income to ultimately determine your income tax rate. And so that's always going to exist in the background. And then if you live in a state with income tax, there will be a state level as well. Separately, we've got self-employment tax. And so if you're a Schedule C reporter for your business, you report your business revenue, what you bill your clients, minus your deductions, and what's left over is profit. That profit is subject to self-employment tax in entirety. So it's 2.9 made of Medicare and 12.4% made of Social Security, which is the bulk. So now you've got an added 15.3% of self-employment tax on top of your federal and state income tax. So what's happening for self-employed individuals is they've got 3 layers of tax assessed on the entirety of their income. And so that's what's going to contribute to this, high tax bill every year. Here's a quick example. Same business. On the left is someone taxed as a single member LLC or sole proprietor. So everything's on Schedule C. And on the right, the same individual elected S Corp. So in this example, their business profit was 160. That's after the write-offs. And the reason we want to start there is that's what you're ultimately taxed on. So here on the left, business profit is 160. As a Schedule C reporter, that entire 160 is subject to the 15% self-employment tax, which is this nearly $25,000. Mind you, income tax will be applied on top of this. Here on the right, the same individual elected S Corp and paid themselves a reasonable salary through payroll of $60,000. Now only this $60,000 rather than the $160 is subject to the self-employment tax, which is generating almost $15,000 of self-employment tax that you just won't pay when you're operating under the S Corp. So super high level example. I know there's going to be questions about the split between owner wages and distribution. In either instance, this entire 160 of business profit is yours as the business owner to spend for personal expenses. Under the sole proprietor single member LLC column, the way you receive it is a simple owner distribution. You transfer and spend how you need. Under the S Corp, the way you receive that 160 is in 2 buckets. One bucket's going to be the wage, the $60,000 wage. It's kind of happening on direct deposit in the background via payroll. The remaining $100,000 you would take as an owner distribution, similar to Schedule C, where you as a business owner facilitate a transfer from business checking to personal. And that can happen at any time and any amount on any cadence. And so between the wage and your distribution, you still have this total cash flow. You're just receiving it in 2 parts. And I only see one question so far in the Q&A, so I highly encourage some questions related to these slides or not. And we're going to cover some high-level deductions for freelancers. I want to say that this is nuanced, so it's going to depend on your industry. And so this may not be a catch-all, but there are some very general ones that almost any business owner can be entitled to take. Home office, phone, and internet. So most of us probably work from home at some capacity. So if you've got a dedicated spare bedroom that you've turned into the home office, you may be eligible for a home office deduction. The way it works is you take a percentage of that room, or you take the square footage of that room divided by the total square footage of your home, and that becomes a percentage you can apply to mortgage or rent, utility bill, phone bill, and that becomes a deductible business expense for you. Software and subscriptions. So if you subscribe to Collective or QuickBooks or HoneyBook, those are all 100% business use. Those are deductible for your business. Depending on your industry, there could be unique, maybe Adobe Creative Suite, maybe your interior designer with something specific to that. Those are deductible business expenses. Some that become a little bit gray, particularly meals and travel. For the most part, they're deductible, but these ones may come into question a little bit more. So these types of expenses, maybe you document the business purpose more clearly. The IRS does put some parameters on how meals get deducted. They're only 50% deductible. Continuing education, if you're on LinkedIn Learning or you need to re-up a certificate every year, or do CPE, those are deductible for your business. Professional administrative costs. So if you pay a bookkeeper, you pay collective, you pay an attorney to draft up your articles of organization, those may be deductible, assuming there's a business purpose. But I would love to hear questions. I know there's probably a variety of industries represented in this group, and there's a lot of nuance in the tax code. So before we switch over to Q&A, we want to do a quick poll. I'm going to ask Sarah to pull it up very quickly. It'll take 2 seconds. We just want to gather some feedback so that we can make these sessions more valuable. And Kim, Rachel, Megan, Lizzie, I see your questions. Thank you so much. Questions don't have to be isolated to this slide. If there's something else about self-employment, sole proprietorship, setting up an LLC, where should you set up an LLC? I moved and my LLC somewhere else. You know, we can cover those questions. So highly encourage you to drop them in the chat or the Q&A. All right, and we're gonna wrap up the poll. And before we switch over to Q&A, I want to highlight Paula has set up this group up with a really great discount code. Lift group, jot it down. It'll also be sent out in the email after the session. If you're interested in Collective, I'll tell you more about what we do. Collective is an all-in-one solution for self-employed individuals, specifically those who want to elect S Corp status. And so what we do is bundle up all of that administrative burden into one fee, one login, one platform, so that being an S Corp is easier to manage. And so it can mean we form an LLC for you and make the S Corp election. From there, we would do your monthly bookkeeping, we set you up on payroll, and then we prepare and file that business tax return. If you're already an S Corp or you're already an LLC, we can pick up from there, make the S Corp election for you, and then take over with the administrative work. So this promo code, feel free to scan this QR code, jot the code down. If you are interested in speaking to someone to see if this is the right fit, this code will take you to a calendar link. And then if you end up joining, you'll get 2 months at 50% off. And I believe Sarah has also put the details in the chat, because we're going to stop the screen share and move over to Q&A. 9 questions. I'm so excited. All right, let's stop this. And we're going to pull up the Q&A. And Paula, if you've got some commentary or some insights from the group, welcome to interrupt and interject.
Sure. Yeah, before you do the Q&A, I just wanted to just kind of reiterate my experience with Collective, and just as someone who, you know, started my business pretty much knowing nothing and figured it out along the way. Having the platform, but also the people behind the platform in my back pocket to answer all of these questions like you all have, and inevitably the questions that just come up week over week or month over month, was invaluable. Just to know that I had like CPAs and accountants who could actually answer my questions and knew my books and things. It was such a nice stress relief, especially when I was getting started, and helping me navigate and plan and have good visibility into the health of my business and how to plan for those quarterly taxes and things. So I just wanted to shout out to you all. I love the tool. I love the features that you keep adding, like invoices, and yeah, thank you so much. And also their blog is awesome. It's written in a way that those of us who are not financially minded can understand it.
Yeah, we like to be financial translators in a way. A personal note, I signed up my dad at Collective. I did taxes, and I did some time doing bookkeeping, and he needed help. And I said, Dad, I'm sorry, I don't want to do it, but I know someone who will. And so my dad has been a Collective member, and it took a lot off of his plate and mine, frankly. So with that, I'm going to dive into the Q&A. Kim, we're going to start with yours. At what point in the beginning do you need to figure out LLC or S Corp? So I think high level, look at your long-term goal with self-employment. Did you organically get a client and you're testing it out and you're trying to see if you like it? Maybe it's not worth the expense to start doing some formal setup like an LLC. Or maybe you found yourself in a groove and you're committed and you like it. Maybe now it's time to get a little bit more formal on paper. In either instance, the LLC is going to be the starting point, whether you make the S Corp election or not. So if at some point you get this gut feeling that, yes, this is working out for me, I'm going to do it, I'm going to pursue self-employment, then start with the LLC. At the point where you feel like, okay, this is growing, it's profitable, it's going to be for longer than a year. And generally as a benchmark, 60,000 of profit is a good time to start thinking about adding the S Corp election. But if you're new and you're still testing the theory, maybe it's not advantageous to necessarily go for the LLC right away, because you can decide on that later. You can operate as a sole proprietor, which is nothing being formed. You still report on Schedule C, and that's totally acceptable.
Can I just jump in with one thought there, Marissa? Which is one consideration, depending on what type of consulting or type of work you do, is that, and correct me if I'm wrong, but my understanding is that, unless you have an LLC or some entity formed like that, you and your business remain the same, therefore you are liable. So if you are in more of a, I don't know, risky type of consulting situation or dealing with PII or something like that, it seems worthwhile to set up an entity earlier. So that's just another consideration outside of like the income and tax stuff as well.
Absolutely. So the risk associated with the nature of your business is going to come into play. And you prompted another thought, Paula. If you have a professional license, architect, doctor, accountant, your state may require you to form a professional LLC. That's kind of like an extra guardrail for protecting your license. And so in the instance that there's high risk photographers, they're on site with a lot of people, there could be more risk associated than me at home, typing an email. So assessing your risk could come into play as well. That's a great call out. Rachel's asking, with the S Corp $60,000 salary, 100,000 distribution example, you're still paying income taxes on the entire 160, correct? Rachel, yes, that's correct. So you will always pay income tax on your entire profit in either formation setup, whether you're a single member LLC or S Corp, the entire 160 will be subject to income tax. The way that when you're an S Corp, the way that it flows to your personal tax return changes. So on Schedule C, you'd have that bottom line that shows the 160, and that's how the IRS knows we're taxing you on 160. When you're an S Corp, that 160 is split. So you'll get a W-2 that shows your $60,000 wage, and you include that in your personal return just like normal. And then the S Corp is going to generate another form called a K-1. And that's going to show that remaining $100,000 of business profit that you took out as a distribution. That remaining 100,000 is subject to income tax, whether you take it as a distribution or not. So you'll have a K-1 that shows $100,000 of profit and a W-2 that shows the 60, which is your total 160. Both get reported on your personal tax return, and that's how the IRS will assess the income tax. That's a great question. Megan, are the deductions available whether the business is an S Corp or an LLC? And how does it work if it's a side business versus a full-time corporate job? This is a great question. So what's deductible for you doesn't change, whether you're a sole proprietor, single member LLC, or S Corp. If it's a legitimate business deduction, and the IRS defines that by ordinary and necessary. So is it normal in the course of your business? And is it necessary for you to generate revenue? So in either setup, a deduction is a business deduction. Adding the S Corp election doesn't necessarily unlock anything new besides the ability to control the self-employment tax. So yes, all these deductions are available for you no matter how you're set up. So you don't want to forfeit deductions depending on how you're set up. How does it work if it's a side business versus a corporate full-time job? So a side business, miscellaneous contracts, no matter how you're set up, those are eligible deductions. When you're an employee of another company, the IRS doesn't let you deduct like your mileage or your home office. So it's kind of a barrier for a lot of people. Maybe you're operating on paper as an employee, but in practice you're a contractor. This is a huge disadvantage for a lot of people because that payment structure doesn't allow you to claim deductions. So in that instance, maybe you do explore setting up an LLC that so that you can have a B2B relationship and claim your deductions. But even if it's a side business, you are entitled to deductions as long as they're legitimate. And nothing changes with what's deductible, no matter your structure. Lizzie, as a single member LLC, is there a general safe percentage we should set aside for taxes? A rule of thumb that I hear often is 30%. And it may depend on your state. If you're in California or New York, maybe it's a little bit higher, but 30% is a general rule of thumb. I would say if your income fluctuates a lot or you've got multiple sources of income, maybe your partner's got other things going on, it could be worth doing quarterly calculations to see how much you should pay in. But generally, I think 30% is a very common and reasonable rule of thumb. It's not vetted by the IRS, but it's common. Narsa's asking, I submitted S Corp almost 8 months ago and I have no communication back from the IRS. What should I do? First of all, we have a resource. There's a phone number that you can call to check on the status, but the IRS does take some time to send something back. I think 8 months is a bit long. Usually I think it's 3 to 4 months that you receive. It'll be an IRS confirmation letter from the IRS. If you set up a registered agent with your LLC, there's a chance maybe it got sent there. If there was an alternative address or registered agent representing your LLC underneath. 8 months is a bit long. So let me see if I can pull the resource or the Help Center article that shows the instructions to call. To add on to that, assuming you filled out the S Corp election properly, it would be okay for you to operate as an S Corp. In the instance that they rejected the S Corp election, they may just have you make the correction and resubmit it with the same effective date. Trisha, I'm starting my consulting business. Do you think it makes sense to start as an S Corp? If you're starting and there's no gauge on profit or secured contracts, I would say the LLC is the right place to start. The IRS gives you 2.5 months to decide if you want to add an S Corp election. And if you do it after that, they have a late relief process. So there's time for you to make a decision. But if it's brand new, the LLC is a great place to start. Catherine, what state is the most beneficial to set up an S Corp or LLC? This is a great question. So the S Corp is always going to start with a legal structure, and that could be an LLC, maybe it's a legal corporation. In either instance, you want to set up your legal structure typically in your resident state, because that's where you're ultimately paying the tax. You may hear about people forming in Delaware, Wyoming. I think New Mexico is also a new one. That's totally fine. But what happens in practice is you still have to do what's called a foreign registration, where you tell your home state that you're doing business with an LLC that was formed elsewhere. You still have to do a foreign registration to your resident state, which is going to trigger the same costs, the same fees, the same filings as if you had just formed there originally. So typically, form in your resident state, and that's where your S Corp, if you add the election, that's where your S Corp will also pay tax. All right, anonymous attendee, if you start an LLC, then move to a different state, how is that handled? I'd like to start one, but I'm not sure I will be in my current location long-term. So very similar to what we just mentioned. You want to form in your resident state, assuming you're not moving tomorrow. And then at the time that you do move, depending on where that is, you may explore the foreign registration where you simply tell that new state that I'm conducting my business using my LLC that was formed elsewhere. That's the simplest, it's the least expensive. The downside of a foreign registration is you're still on the hook for any fees or filings in the original state. So for me in California, there's an annual $800 LLC renewal fee. If I move to Washington State, where it's a little bit less expensive potentially, and I kept my LLC in California, I'd have to maintain an $800 payment every year simply for still existing in California. So foreign registration, it's the simplest, it's the easiest, it's fast, but depending on which states you're moving between, it could be expensive. The alternative is if you're fully moving all presence from your other state, is called either a conversion or a domestication, where you formally move that entire LLC from the old state to the new. And what that does is it'll remove the obligation or the filings or fees from the original state. The downside to conversion or domestication is that not all states offer it. So you have to make sure the states you're talking to both do it. If either of those situations don't work for you, it's common in New York because New York doesn't allow domestication or conversion, is dissolving the old and starting a new where you will move. The downside to that is it's a huge administrative lift. Your EIN will go away. Your business bank accounts will need to be closed and reopened under the new tax ID, and any existing contracts that you have will need to be updated. So there is some administrative annoyance in dissolving and starting new, but sometimes depending on the states that are being handled, it may be the best option. Foreign registration, though, to answer your question, might be the simplest solution. I started an LLC in California and now moved out of the country and don't plan on returning for now. Do I still have to pay state tax? I'm a dual citizen and living internationally and getting a visa. Okay, so this is a complicated tax profile. So this person is living internationally, is still a US resident. It may be beyond my scope to fully advise, but high level, I can tell you that as a US citizen, you may still have a tax obligation as long as that LLC remains open. You will definitely be on the hook for the annual LLC renewal fee. In terms of the international presence, I would advise talking to a tax attorney or a tax accountant specifically who's got experience being international. There's a lot of exemptions that exist, and depending on where you're earning income from, you want to be aware of the exemptions and then also the foreign tax forms that you may be subject to file. Failure to file any international forms are like $10,000 a piece. So it's worth having a conversation with someone who is experienced in international nomads. But high level, if your LLC does exist and you're not actively closing it, at the bare minimum, that $800 LLC renewal fee will keep running. Does Collective only work with clients ready for S Corp or are those just getting started? So at this moment, we are only supporting people with ready for the LLC or ready for the S Corp election. In about a month, we're launching a new tier of Collective, which is super exciting for us, specifically for people who want to be in this LLC only structure. And we'll still support, the monthly bookkeeping, your personal tax filing can be included, the invoicing. We've got a Collective community where there's continuing education. So in the very near future, if you are someone who wants to say a single member LLC, that path will be available at Collective. Desiree, should the software tools be purchased through business bank account in order to be able to deduct them for taxes? I've been paying for a bunch of tools with my personal debit card. Ooh, this is such a good question. So it's best to pay for as much as you can through business accounts. That way you're not like scouring bank statements to look for missed deductions later. But in the instance that you pay for something on a personal card, which is going to happen to all of us, you just want to flag it to your accountant, or if you do your own books, there's a journal entry to record expenses paid personally onto your books. So they will still be deductible. It's just going to require some more manual accounting, and there's just more opportunity for them to be forgotten or missed. So there's a solution. You can deduct it. No harm, no foul. It just makes your accounting a little bit more nuanced. With the 15% self-employment tax, does that have to be paid every year regardless of setup or just under the S Corp? Great question. So there are kind of three instances where this, actually four instances where this self-employment tax exists. And self-employment tax, again, is made up of Medicare tax and Social Security. And so one instance that you might see this most commonly is on a pay stub. If you're employed elsewhere, if you look at a pay stub and you look at the money they take out, you'll see a line item for Medicare and Social Security tax. And so under that structure, they call it payroll tax. So this Medicare and Social Security exists as a sole proprietor. When you're reporting on Schedule C, that profit is subject to self-employment tax. And it's the same when you're a single member LLC. That Schedule C profit will be subject to the self-employment tax. As an S Corp, the way you pay into self-employment tax is through that reasonable salary, where you'll only have the Social Security and Medicare assessed on that portion. And then as an employee of someone else, we call it payroll tax, and you'll see that on your pay stubs. So those taxes exist in either setup. As an S Corp, you just may get the chance to control it. Sarah's asking, can you talk through some of the fees involved in the S Corp? Yes. So an S Corp needs to have a legal structure underneath first. And so again, this can be an LLC. It can be a multi-member LLC. Collective only supports single members. But an LLC or a stock corporation is the legal entity that you'll form with your state. Every state assesses a different fee. So that would typically be the first cost, is the initial formation. EINs are usually the next step, applying for a tax ID for your business. That's free with the IRS. Registered agent service. So this is a service that acts on or receives information on your behalf when you operate a business. So sometimes at Collective, it's free. It's included in your membership. Places like Zen Business or LegalZoom or Northwestern registered agent, maybe it's $100 a year to have someone act as your registered agent. Some states may let you as the business owner be the registered agents. Others may require you to nominate someone. So that could be a cost depending on where you live. That's the foundation of the legal structure. So that will apply whether you're a single member LLC or an LLC with an S Corp election. When you add the S Corp status, here's what's new. You need to pay yourself a reasonable salary, and it needs to go through an actual payroll process. Payroll will generate pay stubs. It will automatically remit the Social Security and Medicare tax. It'll do your federal and state withholdings. And then something that's not commonly known is when you run payroll, there's quarterly payroll tax returns for both federal and state that need to be submitted. And so a payroll software will automatically populate and submit those for you. So this could be a subscription to something like ADP or Gusto or Paychex. And then if you don't want to do it yourself, maybe you're paying someone to set it up and manage it. More robust bookkeeping. So if you want, maybe you do this as a single member LLC, although a spreadsheet probably would be fine. But as an S Corp, you need both of those financials, profit and loss and balance sheet, because those ultimately get reported on that business tax return. And so maybe that means a QuickBooks subscription and a freelance bookkeeper because you don't want to mess with QuickBooks. Or maybe it's QuickBooks and your time to figure it out. So that would be a new cost. The last new cost is going to be filing a separate business tax return. And so this could look like self-preparing with TurboTax, or it could be a quote from your CPA. I think, a common range for a business tax return could be between $1,500 and $3,500. And that's a new cost because that's a new tax return that would be due when you add the S Corp election. Then you consider, where do you live? So I live in California. If I had an S Corp, there is a state level S Corp tax. And so depending on where you live, there could be some state level fees associated to the business when you've added the S Corp election. Generally, what we want to do is outweigh all those costs to the savings potential, if that's your motivator. And if the savings potential is more, then maybe the S Corp is the right solution for you. Lizzie, what other tax advantages can single member LLCs pursue besides the tax write-offs? So retirement plans are a great opportunity. A SEP IRA is typically what I see when you're set up as a single member LLC. It's a pre-tax retirement plan where you get a deduction for the amount you contribute in that year you contribute. And then you pay tax later when you take it out at retirement. So pre-tax deduction, it becomes deductible on your personal tax return when you're structured as a single member LLC. There's also traditional IRA, another pre-tax deduction that you can claim. It's a lower contribution amount, so the tax impact is less. So if you're looking into retirement, usually the SEP moves the needle a little bit more. Self-employed health insurance premiums become deductible. So there are some rules about whether or not insurance is available to you through another provider, like maybe your partner's employer's plan. But generally, if you pay for health insurance premiums for you and your family, that becomes deductible in part. The IRS has something called qualified business income deduction. It's kind of automatic, so you don't need to actively opt into it. But it's essentially a 20% deduction on your business profit, assuming you meet all these thresholds and qualifications. Again, it's not something you need to proactively opt into. It'll be automatically calculated on your tax return. The last thing, which is not really a deduction, but it's something that alleviates the cash flow burden, is paying quarterly estimates. And so if you're new to self-employment, maybe you're used to your withholdings covering your tax bill through like a salaried role. When you're self-employed, you have no means to pay into that tax bill throughout the year. So what we often see is, oh my gosh, I'm so excited. All this organic growth for my business, it's doing well, but then the tax bill comes and quarterly estimates weren't paid. And so it looks like a much heavier tax burden than it actually is because we weren't paying in throughout the year. So it doesn't necessarily lower your tax bill. The first thing you want to do is capture all your deductions to lower that profit. Next is pay in throughout the year. And it doesn't necessarily have to be at every quarter. If you can only swing, Q1 and Q3, any payments generally better than none, but that can help alleviate, owing a bunch of money at the end. So many questions. I love it. Do you have to create your LLC in the state where you reside, or can you set it up in any state like the ones that have better tax advantages? So you can set up an LLC in any state, but you still have an obligation to tell your home state, your resident state, that you're doing business with another LLC. And that's called a foreign registration. So even if you form elsewhere, you're still going to register that LLC where you live and still be subject to your resident state's fees, taxes, filing obligations. So oftentimes you land in the same place with more fees and more obligations to do filings. Todd, I have an HR consulting S Corp. I expect to do around 100,000 this year. Can you talk a little bit more about smart tax deductions? I have an SUV that I drive to client meetings, but also use for personal. I heard that you can write off large SUVs. I'd like to write off as much as possible. This is a great question. So business use of vehicle can be touchy, especially with a group of, fractionals or freelancers. Oftentimes we're working from home. But if you're a real estate agent or driving from client to client, the business use of your vehicle can become super valuable. The way that it works is we call it a mixed use deduction. Unless you've got a car that's like decaled out and it can't be used for personal, it's going to be mixed use where you're going to allocate a business use percentage to that vehicle. More often than not, as long as it's more than 50% business use, then you will get a deduction. And the way that it works with a vehicle is you can choose between two different methods to deduct. One is really simple. It's called standard mileage, where you literally just track the mileage and apply it by the IRS's rate, and that becomes a deduction. The alternate is called the actual method, where you're going to claim depreciation. And I think, Todd, this is what you're talking about. You claim depreciation on that vehicle. You claim the actual gas you spent, DMV fees, tolls, repairs, and all of that then gets applied to the business use percentage and becomes the deduction. For SUVs or vehicles, the IRS has this really complicated weight limit where if it's over a certain I think it's 6,000 pound weight threshold, it changes the amount of depreciation you can take. What depreciation essentially is it takes the total cost of the vehicle, divides it by a lifetime. So for cars, it's 5 years. And then you can deduct essentially 1/5 of that vehicle via depreciation year over year. So Todd, that usually applies when you take the actual method where you need to proactively track all the other expenses like mileage, tolls, gas expense, and depreciation. It's more work to track, but it could yield a more advantageous result, and the IRS lets you optimize. If you don't drive that often, maybe mileage is the better solution for you. Todd, in your instance, what I've seen in practice is just make sure that the business use percentage that you're choosing for this vehicle is not 100%. That's what might raise red flags. And the IRS may look at your tax profile. Maybe you have dependents on your personal tax return. Maybe you're taking some vacations that you've moved to distributions and they can see that. So being cautious with the business use percentage, I would say would be helpful. And then maybe optimizing with the actual deduction method. Let's see, can you talk more about tax benefits of an LLC versus staying as a sole proprietor other than risk? Yes, so we're talking about sole proprietor where nothing's formed, no legal protection, no legal business name or tax ID, which is totally acceptable versus opting to form the single member LLC. We talked about how it creates a layer of liability protection, and that's great. Some of the other benefits, there aren't any additional tax benefits. I'll start with that. Whatever is deductible for you as a sole proprietor remains deductible when you add the LLC. So there's nothing from a tax perspective that necessarily changes. From a visibility perspective, maybe you've got the legal business name, the tax ID, so you're not giving out your social security number. The other one that I haven't mentioned yet is opening the LLC will open the door for the S Corp election. Meaning the sooner your LLC is formed, potentially the farther back you can backdate an S Corp election potentially, because an LLC needs to exist before you add an S Corp election. So if you're someone who's testing the theory, but you have a hunch it's going to go further, setting up an LLC can open the door for electing S Corp status to a prior date. And I just have to say, I really appreciate all the questions. When you're ready to transition to an S Corp, what is the typical timeline from going from LLC to an S Corp? How much runway should you allow? Assuming that you fill out the S Corp election paperwork properly and it's a simple 2-page form, you can assume that it will be accepted, and then you can start putting in place all these administrative parts to operate as an S Corp. With collective, if we need to form your LLC, the timeline changes a little bit because each state has its own different processing time. If you're already an LLC, we get you started operating as an S Corp right away when we submit your S Corp election. So onboarding typically at collective could be 2 to 3 weeks because there's some coordinated effort on the other side. But we assume that you're going to be an S Corp and just start rebuilding your books. We get the payroll registration set up. And there's no big tax deadlines due when you immediately elect. So we're just kind of maintaining your books and your payroll until we're up against that tax filing deadline. There are some seasonality impacts. So if you want to elect S Corp status and get a hold of an accountant in March, it may be slower because the accountants are bogged down. So there are certain times of the year where accountants are busier, which can lead to lower service times. But generally the IRS or what you can do won't be held up. I've always heard business owners talk about all of the amazing tax benefits they get. Is that really true? I think it depends on how big your business is, because I think we can see that there's a lot of advantages when you make a lot of money. Maybe you're a public corporation, you get to deduct a lot more. Maybe the industry you're in can lend itself to certain tax credits that are not available to other industries like R&D or easy credits if you're hiring employees in certain regions. This is a tough question for me. Are they really true? As long as you're aware of what's deductible and what resources are available for your type of business, I think there are a lot of advantages. That's not to say that I can turn you into Jeff Bezos and not pay income tax, because I don't think that's feasible. But there are a lot of opportunities if you can ask the right questions or know where to ask the right questions. And we're getting at time. There's 3 more questions. I think we can do it. Can you talk a little bit more about opening business bank accounts for LLCs and S Corps? How to keep them separate, bookkeeping strategies? Great question. So when you operate as a sole proprietor, nothing's formed, you can open a separate business or a separate bank account. It'll probably be a personal account that you just use as a business account. We see that often, and that's totally fine from an administrative perspective. It's doing the right things. It's keeping things separate so that you're not commingling. When you form an LLC, you now have a separate legal entity and a separate tax ID, which means you can take those documents to a bank and formally open an actual business bank account under that business name. That's advantageous because again, separate, it's under the business name. It now has that separate liability protection where it's an actual business asset instead of a personal asset. When you add the S Corp election, because your LLC remains in place, that's still the legal foundation, that business bank account will stay the same. So you don't have to change the business bank account when you switch from LLC to S Corp, assuming you're still using that same LLC underneath. In terms of keeping them separate, a lot of people have separate debit cards. It will happen that you will commingle funds. If you have support, you would just hand over a list to your accountant or collective and say, here's what I paid out of pocket for my business this year, and they'll manually record them onto your books. Highly suggest an accounting solution, whether you do it or not. I've done Excel spreadsheets for bookkeeping and it's not fun. So I highly recommend something like Wave if you want to DIY. QuickBooks is a little bit robust depending on how you're structured, but pretty intuitive. If you're looking for something all-in-one and someone to do it for you, again, Collective might be able to help. But highly recommend the separate bank account, whether you're a sole proprietor or not. That will make your life easier at tax time. And then any bookkeeping app. It doesn't have to be Collective. It can be something like Wave or Keeper or anything like that. How soon should you establish an LLC? I'm just getting started on my own. Should I wait until I have a few clients or a certain amount of profit, or is it better to start an LLC right from the start? So as Paula brought up, what's your risk like? Depending on the nature of your business, there could be some default risk associated with the nature of what you do, in which case an LLC sooner or later might be better. Maybe you also consider where you live. If the LLC fees are relatively low, like they are in some states, maybe it makes sense to just do it now. Otherwise, if it's a high fee state, maybe you're really not sure how the consulting is going to go, you can wait until you feel more comfortable in a groove. Just know that when you do set up the LLC, you're going to have some administrative work to change. Your contracts will need to be updated, new business bank account, and then you'll have the legal LLC will be set up, new tax ID. So it depends on how comfortable you feel in the long-term growth, and I would consider the fees associated in your state. And then we've got a state-specific question for California. California has an $800 annual fee to form an S Corp. Is this 12 months or calendar year? If calendar, should I wait till January 1st so I don't get hit twice in 2 months? Is that fee deductible? So high level question, yes, the $800 fee is deductible for your business. In terms of the timing, typically when you set up an LLC, they'll waive the $800 LLC fee in the first year of business. And then the next year is due within the first 4 months of the new calendar year. So I may need to think about this question and I'm sorry. Depending on when your LLC was formed, that first year may have been waived if it's a brand new entity. And then the subsequent year would be due next April. But let me follow up with you on that. It's a little bit tricky with the timing. Great question though. And we got through 22 questions, almost right on time. And let's check the chat. Let's see. Kim. Yes, there will be a copy of this presentation. I think that's it. I think we covered them all. Paula, any closing thoughts?
No, just thank you for your time and all of this really great information. I think it's helpful and good food for thought.
Absolutely. You're all welcome to find me on LinkedIn. We do webinars every week. They're free. And Paula, you and I and Sarah can stay in touch if we need to coordinate any additional support. We'd love to present privately to this group again. And thank you for the participation. We hope to see you next time.